So the Gates Foundation has gotten into the field of microfinance. When Bill and Melinda saw how important financial services were for the women they were meeting in rural communities, when they were talking to them about health care and talking to them about how they educate their children, it became very apparent that having money when they needed it, having cash when they needed to pay for a doctor visit or buy a school uniform in order to get their kid in school was a major challenge. And it was hard for people to organize their financial flows, to organize their money so they would have money when they needed it. And that was taking a lot of time out of their lives and costing them a lot of money. The way they save is to buy extra animals, buy jewelry, buy things that when they have to convert into cash in order to pay for a doctor visit are kind of hard to do. It's hard to sell an animal or pawn jewelry. It's expensive. And so people put off those sorts of decisions, and if you can imagine not going to a doctor for 4 or 5 days because you're worried about selling an animal because you're not going to get a good price, the kid's going to be a whole lot sicker if you haven't been able to go quickly. So we're focusing on savings. What we're focusing on is how to get savings accounts into the hands of people living on less than $2 a day. The big challenge with savings is trying to reduce the cost to clients and institutions. It costs an institution about $1 to have somebody stand at a teller window, and it costs most people about $1 to get to a bank if you don't live right there or work right there next to the branch. So therefore, it doesn't make sense for institutions or poor people alike to save $1 or $2 or $3 at a time. It just costs too much money. So the big challenge with savings is to get the cost down for everybody. If we're able to get transaction costs down to 10 cents on a dollar or 5 cents on a dollar, you're going to see a veritable explosion of demand for savings because most people in the world want a savings account. The problem has been that we can't offer it to them because it's been too expensive. When you open a new bank that offers savings accounts and loans at the same time in poor communities, you'll find 5 or 10 people wanting a deposit account for everybody who wants a loan. We think that's powerful evidence that people really want savings, and it's our challenge to figure out how to supply it to them. One of the most exciting new opportunities that we have in the world of financial services is that many countries are considering ways in which banks can hire retail networks, work with post offices, with shops that sell airtime, to allow them to be the cashiers, the tellers for financial transactions. A lot of this is mobile phone based. The communication between the agent and the bank happens on a mobile phone. Mobile phones are pretty ubiquitous. Just about everybody in the developing world either has a phone or can get to a mobile phone very quickly. There's never been any sort of invention in the history of humankind that's moved this quickly around the world. So what happens with mobile phone-based technology that we're looking at to support saving services is that people can go to a small little kiosk, just a woman in a window, if you will, and hand over a small amount of money that then is sent by that woman via cell phone message to the bank. So what you get is on your cell phone, you have a message that tells you the money's been deposited, and then you can access that money anytime you want, or you can send it to someone in another village. This has been a system that allows people to get money out of their pockets and safe in a place so that it's not spent, so that it's there when they need it for a more important use. And based in Kenya is the kind of most interesting example of this we have in the whole world. Savings can have a really important effect on people's lives. If you can offer people an opportunity to save money, every time they have a little bit of money in their hands, they'll make use of it. They'll make good use of it. The example might be that in Kenya, when farmers were offered an opportunity to not take all of their harvest payment, all the money they would get for selling their crop, but rather set some of it aside in fertilizer vouchers, which meant that they had this piece of paper that they could go redeem when planting season came and get fertilizer to use on the crops. There was a big uptake of this sort of thing, and farmers' yields who used the fertilizer vouchers increased 32% in year 1 and 39% in year 2. Because simply having an opportunity to set money aside for something that you know you're going to need several months later is something everyone can understand. It's the way we need to organize our own lives. It's why we have the pension money taken out of our paycheck before we even see the paycheck. You know, we all need these sort of devices to help us save for things that we know we're going to need to accomplish later on. So the big trick about mobilizing savings is to figure out how, through agent banking systems, you can get opportunities for people to set aside little bits of money each and every day when they've been paid, at the end of a market day, or when they sold some sort of livestock or other produce. So this is how we think that we can encourage people to save in financial form that's a lot more efficient than the ways they currently have. One of the areas we're working with governments around the world to develop the sorts of rules and regulations that help banks develop agent banking networks with telcos, with retailers, with post offices, with government offices of one sort or another that allow people to go transact in their villages and in their poor communities. This helps banking services get to where people are. The Gates Foundation also works in the field of insurance. We do that because we think it's really important to try and protect people's assets. You know, if people have worked very hard to get out of poverty, which most people do, and along comes some sort of shock, it knocks them right back down into poverty. This is where we think insurance might be able to help families. So we've put a significant amount of our resources into figuring out microinsurance. We think microinsurance could have a powerful impact on people's lives. For example, when I was in India talking with women who participated in a health insurance scheme, I asked them what the benefit to them was of having insurance. It was really interesting. They seemed to be more inclined to go to the doctor sooner when they had a health situation, when they had insurance, because in their minds they'd already paid for the service. And so therefore they were quite willing to just go right away. So if you think about that in terms of health outcomes, we'll be interested to study and see whether the health outcome is actually better because people go quicker to the doctor when they're not as sick. If it turns out that that's true, that people go quicker before they get quite as sick, then there'd be a big impact from having health insurance because there'd be fewer lost days from work, people would have not lose as much income from being sick, and so it could be a pretty interesting product. So that's the kind of thing we're exploring. We're trying to figure out where the impact for clients is of having access to microinsurance.